All right, what's the vibes, family? One major question that I got today was, what exactly are we doing from here from gold? Are we finally about to start to see that bounce coming, or are we going to see a continuation lower? And this question comes every time a big expansion comes, right? Like I like to say, right, when everybody is now talking about a particular asset, this is the time you want to be very cautious and actually have information on what to do. Remember, disclaimer, this is not financial advice. I'm really just sharing my thoughts and experience and the things that I'm doing on the chart so that you can learn anything from a thing or two from it. Right. All right. So let's look at it. We've had Monday, Tuesday, Wednesday expand, taking out the drawn liquidity. I told you yesterday how it's important that you come into a week and you have a drawn liquidity, and that point gets met. One of the things you want to do is, what? That is done for the week. I made money from it or I did not. The high probability level or key level that I was watching for that week to get stabbed, that has gotten done. So I can as well just take a chill pill. And that's exactly what I did in New York session and London session today. I decided to just take my eyes off of whatever is happening here. Not because I didn't have, some intuition, but what I wanted to see for the week is already done. Right. But back to the question. Do we think gold is done with its sales, or do we think it's going to continue? Now, there are certain things we need to look at to make, the best possible hypothesis or thesis for what would happen with this pair, right? We've been seeing lower prices, and these lower prices have been because of something major, right? The yield market, right? Now, when it comes to the yield, there is the short-term cover of the or the short-term end of the yield, which is the 2-year yield, right? And we also have, the longer terms like 10-year, we also have 30-year, right? If we look at the long term, the long-term end of the yield, we'll see that we've been seeing, old lows even been taken out here, right? If we look at, let's see if we can see US 30Y. Can we see that? The yield, the 30-year yield, we'll see a longer swing to the downside happening in here. And I want to teach you something inside of here, right? The 2-year yield covers or allows you see the short term or the short term, the US 2Y or the US or the 2-year yield is the short term end of the curve, or is the short term end of what the feds are doing. It's kind of like, I'm trying to find a way to explain it better. It's kind of like, what are the feds thinking about at the moment? What are they looking to do? So right now, we're not seeing any breaking market structure on the 2-year yield yet. And it's because the feds are still currently in the space to hike rates, right? 9 out of 18 members of the Fed chair last week, when the Fed FOMC came out, were or voted for hawkish movements. And that means, right, for right now, because of the things that have happened in the Strait of Hormuz and the war and all of that, even though the Strait of Hormuz is being opened, right, the inflation that event caused, the Fed still have to deal with that. And because of that, they would not be able to, at least for the moment, cut rates. And that's exactly what I'm trying to explain, right? In the now and here, right, next couple of months, like right currently, the Feds or the 2-year yield is still very bullish. Now, on the longer term note of it, the Strait of Hormuz is being opened right now. Things are going to flow as normal. Oil is dropping, meaning things are going to get less expensive than they've been, in the last 1 month, 2 months. So on the longer term side of things, right, we can see those rate cuts and money printing coming. That's why you see the 10-year yield, is much more bearish. Even the 30-year yield is much more bearish than the 10-year yield. And it's because if we look into the future, if we think about, oh, okay, what is a long-term ideal for the yield, then it is that, oh, okay, we can actually have rate cuts coming in the future because we have the rates hiked. And because inflation is also hiked, the feds are not going to be able to cut rates. That's in the here and now. So I'm still looking at this as potential buy side. And I'll show you an example here. I was watching this with the community, when this was happening. And at the time, DXY was going also lower. Remember, the dollar chases yield. So if the yield is going lower, the dollar goes lower. When this was going lower, you could have thought about it like, oh, the story has flipped for the yield market. And maybe we're going to start to see extreme buy side for gold, because if yield is going lower, right, we're going to see gold go higher. Just look at 2023 to 2025. We see yield markets just continue to print lower lows, lower high, or lower lows, lower highs. And that allowed gold to expand. This year, we have seen, the opposite of that happen, and we've seen gold collapse under that pressure, right? So, like I was saying, here it looks like, oh, we're actually going lower. What's going to happen right here? But it's still in the range of market structure, right? This is last expansion that took out an old high, and we have the old low inside of here, bullish order block. Price was just returning back, just playing the game as it should. And that's what I'm thinking about here also, right? Yes, we've had this decline inside of here, right? But that is not enough to say that we're now bearish on the yield market. So what am I watching? When we start to take out these lows, when we start to see, the yield take out this low, then yes, I would agree that, okay, maybe the script is already changing now. We can want to start to see some sell side happening. But for right now, it's still bullish in my view. So remember, if everything in the US, and I want to use that to take you to, let me see if I can take you to the calendar, right? Because one of the things you want to understand is there are certain things that control price, right? And if you just hold one part of it, it's like there are many ways to do, or no, that analogy won't go, right? There are different keys, right, that you need, right, into a mansion, right? If you just have the key to the front door, you don't have the key to the kitchen, you don't have the key to the master bedroom, you can just enter the house, but you really can't go everywhere. You just have one vision and every other place is blocked. But if you have all of the keys to the room, all of the keys to every door in the house or in the mansion, then you're able to go everywhere. You're able to actually, do whatever you want inside of the house, right? And this is exactly how the market is. The market is not just technical analysis, right? And many people focus so much on technical analysis that they forget the drivers of the market, which is fundamental analysis. And you might not agree with me so much on this, but it's just fact, right? There are certain things that actually govern price, and we're going to look at it, right? I'll share a little bit with you. We want to look at three things importantly, right? We want to think about fundamental analysis. We want to think about technical analysis, which is what we know a lot, right? Your how to read the market patterns and all of that. And we have sentiment analysis. Where is the head moving towards? What are people doing? Understanding that can be a little bit tricky, but it's a very, very good way to think about the markets. It's like, oh, everybody's shouting buy, 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 buy right now. What do I want to do? Do I want to join that crowd? Maybe not, right? But even on the fundamental things, it's broken into sectors that you want to understand. I want to show you. I hope you can see my Chrome here. Forex Factory. Okay, I think I have calendar here, right? Even on the fundamental ends of things, right, there are still things you want to pay attention to, right? And it is economic growth, inflation bias, and the jobs markets. These three things are the things that govern any currency, pair, or any asset class, right? If you can figure out these three things, especially for currency pairs, I like to look at this on, my major currency pairs, GU, DXY, and that information helps me to think about gold more clearly and all of that, right? What do I mean? Economic growth is talking about your GDP, right? Your GDP growth. You'd see these news releases on your Forex Factory, and you probably don't know what they are, also, when I was starting, I was told not to really pay attention to it. So I didn't really pay attention to the numbers. I just wanted to see if there was a red folder, and I'll be trading on that particular day. But there's more to it, right? The numbers are actually giving information on what exactly is happening, right? So, like I said, there are three of them you want to pay attention to. The growth numbers, I'm trying to go to current dates, but you want to pay attention, you might want to write it down. The economic growth, right, of that particular asset class, the inflation bias, right? Is inflation being hiked right now, or is it hot, or is it cool? Basically, right? And the last thing is, what is the jobs market of that particular asset or currency or country saying, right? And well, I'll show you a little bit of that. You already know this news releases, but we'll just see it. So this is June. I want to show you this week. This might need another video to actually talk about this properly. But again, let me know in the comments if you want to hear all of that, right? If you want me to go deeper on fundamentals. Some people think it's boring, but it's actually very interesting. Right. So where are we? Monday. Right. So if we look at Monday, we did not have any USD news release, but Tuesday we had news release, flash services PMI, manufacturing PMI. See, manufacturing PMI, services PMI, retail sales, and consumer confidence, right? Also with growth GDP. When you see these news releases, they are talking about the economic growth of the company. And the way you want to read it is, if we have the numbers, right, that come in on the particular day, the actual, when it comes in and it comes in higher than the forecasted number, then it means that the growth value of that currency, the USD in this case, right, is better, meaning the economy is seeing growth in this sector, in the manufacturing ends of things. On the services end of things, right, they are not lacking also. It comes in the same as expected. So it's not bad. It's also larger than the previous one that happened. So it makes sense. That's growth numbers. Now, inflation numbers is your CPI, your PPI, and your PCE, right? Inflation bias, CPI, PPI, PCE. You also look at yields. Yields tells you about rates. So with CPI also, are we seeing CPI? This is CPI for card. And in this case, we're seeing that card, right? We have card. We see that the CPI number came in higher than expected, meaning that the inflation is hot here. This indicates that the pair will see buy side. If we see that we have, more than expected, more than the expected percentage on that particular news release, it indicates that that particular pair, right, is bullish, right? I want to get into details, but I don't want it to take so much of our time inside of here. The reason why it's bullish when, CPI comes in higher than expected for the DXY is because the Feds are less likely to cut rates when there is inflation. When inflation comes in higher than expected, right, the Feds would find it hard to cut rates. If the Feds are not cutting rates, it means the yield are going higher, right? If the yields are going higher, dollar chases yield, right? Dollar follows yield, just basically. Do you understand it? Right? So that's why it makes sense. So inflation bias, you want to understand what CPI is doing, what PPI is doing, what PC is doing. This news release will tell you exactly, right, what the inflation bias of that particular pair or currency that you're trading is. The last one is the jobs market, which is your NFP. Are we having more jobs added? Like if we look at this week, I think we had unemployment claims for the dollar. Look at it. Thursday, that was yesterday, right? We're already in today. But yesterday we had unemployment claims and it came in at 215K, while the actual was 225. So now look at the name, unemployment claims. That means the people that claimed unexpected, the market or the economic or the guys that handle economics or that look at economics, they feel like, oh, okay, you know what? Their forecast of people that will actually claim unemployment this particular month or this particular week will be 225,000 people. But you know what happened? Less people claimed unemployment. Already, when you look at how the numbers come in, it's showing you something. The green is signifying that it is better than expected. So lesser people are claiming unemployment. That makes sense. When it comes to NFP, the more people that actually, if we have higher numbers than the expected or the forecast, then that means that we're having more jobs because NFP is telling you how many jobs are being added to the US. Do you understand? Right. So now, what am I trying to show you inside of here? The dollar is still very, very, very strong, especially when we pair it to other asset class. CEU, flash services PMI, lower than expected. Manufacturing PMI for GBP, lower than expected. Flash services PMI for GBP, lower than expected. AUD, lower than expected CPI, right? Lower than expected CPI. Do you understand? So we are seeing that compared to the other, compared to the other currencies, right? We're seeing that the dollar is seeing strength. Are you seeing it? If you go and get to these numbers and look at it properly, you understand what I'm saying. That is why when we go back to the chart and we look at a pair like AUD USD, what do we see? We see AUD USD collapsing. Because first, we are seeing cooling inflation for AUD USD, just like we saw here, while we are seeing rising inflation for the US. Remember, if a rising inflation would indicate that the particular currency stays higher in terms of movement. Falling or cooler inflation would indicate that the currency moves lower. If we look at GBP USD, what are we seeing? We're seeing lower prices because when we look at the services aspect or the growth aspect of the pound or the UK and the US has better numbers than the UK. So when we compare these numbers together, what do you think is happening? British pound versus the dollar. The British pound is weak against the USD dollar. That's why you see lower prices. Then if we go back to just look at DXY, we see that DXY continues to rally higher because its numbers and everything that is happening inside of that fundamentally is strong. Now, this idea in itself is the reason why I'm still bearish on gold. Is the reason why I still want to see lower prices on gold. Until we start to see changes on that front, I would still hold my end on gold. And I told you yesterday, it's like they are in a war, right? Gold and DXY. Gold likes when there is money printing in the economy of the US. Gold likes when, inflation is being cooled, when the yield is dying off, right? Because what will happen? Investors will remove their money from an asset that is not doing well, which is not DXY right now. DXY is doing well. So if you have a bond on DXY, you have zero need to want to remove that bond because you are even making more profits as the yield is going higher. So why do you want to remove it? So instead, you would remove your money from a risk asset like gold or BTC that has just been crumbling and crumbling and put it in a more stable asset. When you get money, the most important thing is security. This is how the big players think. So I'm following the line of thought, and until we start to see the DXY start to crush lower, I'm holding the line of thought. Right. So we have not still entered that monthly fair value gap for the DXY. Right, I'm still expecting that price goes in there. Today, we saw that price run lower, right? That was Thursday. I'm just speaking in Thursday. That's where we are. We saw price run lower on Thursday. Wednesday going into Thursday, we saw price, especially today. Today was a down day for the dollar and an up day for pairs like GU, pairs like EU. Not so crazy in terms of movement. I was going to take a shot. Let me show you my experience today. I was going to take a shot, but I was telling my guys on the call, on the live session that we did, right, that I'm not going to be taking this shot because of time. I would have taken a shot here, and trust me, I would have taken a loss. There's really nothing bad in taking a loss, right? But I didn't take this particular trade because of time. I was going to take this trade 1 hour or 1 hour 30 minutes after the news release. It's just the way I like to engage news releases. We'll talk about that another time. Right. But for right now, I really just look at this as that retracement that I've been talking about from Monday. I called this a Wednesday midweek rally, which means Wednesday we return back into premium or into the range, take out some buy side liquidity, and then continue. We did that Thursday. You don't decide when the market decides to do what it wants to do. You see that the move started on Wednesday, right? And complete it on Thursday to do that retracement. What am I expecting? I'm expecting lower prices for pound. I'm expecting lower prices for euro. I'm expecting lower prices for gold. I'm just going to be on the side of sell side until something changes, until I start to see a break in market structure. Yes, we've seen, a return back higher here, but it's not enough for buy side yet. Right, like I said, I would not just be looking at technicals to make decisions. A healthy pullback is healthy, or this pullback is healthy. I'm a bit tired, that's why I'm rumbling my words, but I just hope you are really, really grabbing on, some of the things that I'm saying inside of here, right? So this week is, for me, I think the the big money of the week has been done. We've seen, major buy side, major sell side liquidity being grabbed here, right? Maybe we still have some business to be done on EU and GU, which I'll be watching GU for tomorrow. I'll be looking for some shorts today, actually, later today, but you get what I mean, right? I'll be looking for some shorts here. I would not also mind taking a scalp or maybe a position I'll be able to hold on to for gold also. But I'm still on the same side. That's what I want to tell you, right? And again, this is not me telling you to go and do anything. I'm just showing you these things so that when we go back and come back and look at this and say, oh, okay, why were you thinking about this thing, right? You can refer back to this video and say, oh, these were the reasons why this guy was, looking at this thing, and I can learn from it. I was showing my guys this afternoon my journal coming into the week, and I was letting them see how everything I did on the week was already outlined. So seeing it play out, I know the reason why I did the exact things I did because I planned it beforehand. And I can just go back and look at, oh, okay, this is exactly what I planned. And it played out. I just followed my plan and things worked out well. Right. And it's the reason why going into first aid trade today was not something I was going to do because my plan was already done for the week. I wish I could show you that, but we've exhausted time here. I want to keep this video short and, informational and not just too much information. So I can go on and on about that. But yeah, this is what we have. I hope you learned something from this. I would see you in the next one. Bless family.